Hello everyone, this is Evan from the Trade Risk here on Wednesday, March 9th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, a few individual names, and then top the video off with some trade ideas. Now, before we jump into things, I want to bring your attention to a webinar that I'm really excited about that I'm hosting in less than 2 weeks. Tuesday, March 22nd. You'll see the link appear right here. You can click this link on the top right of your screen now of this YouTube video. That'll bring you to the webinar. You can click it right now. It won't disrupt this video. It'll open in a new tab. Register there. Just drop your email. It's free. There's going to be a lot of cool content. I'm putting together a slide deck for this one. So for those of you who've attended my past webinars, those have been more off the cuff, kind of looking at real time at charts. This time we're going to go through a little more structured presentation. I hope to bring a good amount of value, show you how we trade. So click that link, register there. There's more info on that page. Chances are, if you like these videos, if you watch these market recaps, you're going to like the content in that webinar. So I hope to see you there. I'm looking forward to it. Tuesday, March 22nd. Now, getting into markets. We closed up 50 basis points today. It was an inside day. Let's look at where we came from this week. We started off, well, let's discuss. We ended the week on Friday right here on this bar above SPY 200, running pretty overextended, particularly on the NIMO and some of those internal readings. We had a very quick run to the upside, and we were expecting, I think many people were expecting, we need a pause, we need a rest, we need a pullback, and we've gotten exactly that. Monday we came into the week and we basically just went sideways. We couldn't push higher, we couldn't push lower. It was an inside day Monday. Yesterday was finally a trend down day. We closed down 1% in the SPY. We closed on the lows. Then today we went sideways with another inside day. So for those of you who are looking for some digestion or pullback, you've gotten already 3 days of it. Now, it may not sound like much. It certainly doesn't look like much, but maybe that's all we get. This market does continue to hold a pretty strong bid underneath it. We couldn't break lower today, and in fact, the internals this morning and throughout today were still pretty strongly skewed to the bull side. So, despite this market, being quote overextended or running real hot, it continues to do so, and even this big level like a 200, the 61.8% retracement, all these different levels in previous supply sort of coinciding with 200. I mean, it has stalled price temporarily, but it's still holding pretty pent up. It's a real difficult situation right here. I certainly wouldn't want to try and predict what tomorrow is going to be or how we're going to close this week. I think it can really go either way. The bears can continue to kind of push us down here, and but I can just as easily see the bulls pushing higher. I think the larger context on this daily time frame is still certainly bullish, and I don't see any way you can fight that. The bullish aligned fast moving averages still supporting price. We're above the 8-period EMA. So I know we have events tomorrow with the Eurozone that should be some type of catalyst for the market. We'll have to see, especially with today's inside day. Does that springboard us higher or lower? It's yet to be seen. But right now, if you were looking for, like we were looking for a retracement. We were short the close here on Friday in the SPY, and we did cover half today at the lows because we did recognize that we did work off some of those overbought conditions. We are still, quote, overbought, but it's still it still has come down from where we were Friday. So we did lock in half of those gains, and we'll see how the rest plays out. We still have long positions on. We took one today, a new position. We'll discuss that later in the video. So we're playing it very light right now, but we have some exposure on both sides, and we're sort of prepared to see where this market wants to tip its hand and take us. The last thing I'll discuss here on the SPY, this big open gap. This is the open gap from the year, from 2016. We had this gap lower to kick off the year on Monday. We had an attempt to push higher with this hanging man on Tuesday, and then this open gap remained open for the remainder of the year. Maybe we need to beeline and catch that. Maybe we get some type of continuation tomorrow. We'll have to see. It's all speculation. Let's see how this market acts after some of the news out of Europe and the Eurozone, and then towards the end of this week. IWM really really strong here, the strongest of all three of the major indices recently, and it ran super hot, right, extreme overbought levels right into this big major previous level here, and it stalled completely yesterday with this nice gap lower. And not a gap lower necessarily, but a trend day lower, and then it caught its footing today and couldn't take out and close below yesterday's lows. So again, we have this sort of standstill here where we're still a bit stretched, but this is a very bullish context here with these bullish aligned moving averages. You have a major level right above us right here, right around 108. So we'll have to see how this plays out going forward. The Qs, very similar. This one a little more peculiar, the way this one's been really slow, sort of sideways digesting here, sandwiched in between two big levels now that seem to be showing their importance. It couldn't take out 106 here, which were the highs from the latter part of January of this year, and then we did find some support right at the pivot bounce highs from late January. So we're kind of sandwiched in this 1 or 2 point range from 104 up to 106, and we need to see which way this breaks. I'm still looking at the Qs for context and clues here, because I think how this resolves might lead. I know this might just suggest of what is to spill over and happen in some of these other major indices. So I'm keeping a close eye on the Qs. It did reverse nicely when again it looked vulnerable this morning, so we'll have to see a little bit for something in these indices. Now if we look at some other markets, let's run through them quick. TLT, you got your range right here. It's in the middle of it. It's chopping around. It's doing what stocks do best inside of a range, so I don't think there's too much to analyze there. USO continues to rip higher here. I was of the belief, and again that we would be range bound here towards the top end around up to $10 or so far. It looks like it wants to just continue higher here. I like the way it closed above this sort of fake out, perhaps reversal bar that maybe shook out longs and maybe got some people looking for some mean reversion here, and it completely just ripped to the upside. So we'll have to see if that continues. It does look good right now. There's nothing not to like here in USO. Again, maybe a little stretched given how much it's moved in the past couple of weeks. If you're in it, continue to trail and see if that continues to work for you. UNG, catching a bit of a bounce here recently as well. Snapped this really steep declining trend line just the other day, and it's pushing higher. Again, you can see these moving averages not in bullish formation, not favorable right now for the bulls, but certainly with how much this has been beaten up this year, the past few years, we can certainly see more of a pop here. $7 or so, this breakdown level from late December is going to be a big area. Let's see if the bulls can get us back up there as a longer term target. Finally, gold metals. So gold sandwiched in here between some support, broke out of this resistance level that it was carving out this range here from most of February. It broke out higher, kind of failed here up around 122, and then looks like it's trying to find some support back at these old highs right around 119. So still bullish, but keep an eye on these kind of dual support lines there. In silver, we drew this big trend line down that's been holding down price, or at least coincides with a lot of these lower highs that have been putting in place going all the way back to the beginning of 2015. I think that would be a big breakout back above $15. That's what we discussed last time. Still stick with that same sort of thesis. Now, looking at some sector analysis, utilities, got to bring these guys up. I am still in this trade, so I am biased. I always like to gloat about the slow-moving utilities name that I am in as a momentum trader, which is quite ironic, but we've been in this for a while. It continues to work. Almost got to our first sort of profit target today, but not quite. So we're still just hanging out here, continues to act well. Longer term play, look at this weekly chart, still looks great. I like it a lot. Staples, we've talked about these, right? Utilities and staples, we've been bringing these two sectors up for quite some time. Continue to make new highs here as well. I have no position, but this looks good, so keep an eye on that. The third sector, which we've been bringing up a lot, industrials, still acting well. A little bit sluggish sideways day today, in line with the market, but it's been acting well. It's got a lot of previous overhead supply right up above it, above $54, so be aware of that, but it's been acting well. Same thing with materials, similar to industrials. A lot of these sectors are starting to act well. There aren't too many straight laggards, except for, and again, we discussed this, IBB, the biotech index, which is still a little bit sluggish to a lesser extent, healthcare, XLV, but mostly this IBB, which is rolling over a bit today. The only sector that actually saw, and I think the only sector that saw some follow through to the downside today, so keep an eye on that. If you want to short something, if you want to, look for some of this short action or move to the downside, keep an eye on IBB. Now, individual names, we're going to walk through a few of these. Netflix, I know this got a lot of attention on Monday when we had this potent down day, sort of erasing all of Friday's progress, but since then it's caught its footing again, and it's finding support back where right around $95, which held as support for most of 2015. So that's an important reference point. I think you can own Netflix with a tight stop loss right around, the lows from this week, 94.50 or so. If this starts to break down, I'd be very careful in Netflix. Facebook, it's trying to reclaim. It fell back below this 107.50 area. A lot of people are calling it 108. This general band of resistance, it's below there. And then, of course, you have where the failure or where the top actually happened back on the early March the 2nd, right around 110 or so, which coincided with these November highs. So you got two sort of resistance areas above us here. Facebook still trying to hang on and act positive and not break back down. So keep an eye on that going forward. Twitter did break back down. It did clear this for a few days above 1870 or so. These were the January bounce highs. And then back above it in mid-February, or failed in mid-February, back above it on the 3rd of March. So it's back below this. I think you got to be careful here. Twitter, very clearly, it seems like a good buy or a risk-defined buy if it can get back above $19. So long as it's below there, I would just sort of keep it on the watch list, but doesn't seem too interesting. Finally, EABA, which is Alibaba. Take a look at this pattern here. It's back to its January highs right here. So a bit of a V-shaped, not quite a rounded bottom, but a bit of a V-shape the way this came back up. Keep an eye on $73. This is contained price for basically all of 2016. If it can push through that, then I think it can start to fill some of these open gaps back from late December. Now let's get into some trade ideas. The first is VC. This is a name that we got long today. This was a partial position for us, so we're light here. This thing got crushed heading into or a little bit after the start of 2016, but so far it's been trying to trend and recover some of this open gap. I like the break above these recent highs here. Nice strong 5% up day. We're involved in this, looking for some further retracement of this gap, so we're in that from today. McDonald's, something to keep on your watch. Look how this is starting to clear out of this recent band of resistance here above 118 or so. Keep this one on watch heading into the remainder of the week. See if you can get a weekly strong close higher. AAP, another one that's right at some resistance here. Advanced Auto Parts. This has been in a monster trend for quite some time. A recent pullback. It's back up to this 154 level, which has caused issues for the stock going back the past couple of months. Keep an eye on 154 going forward. Finally, CAG. This one's breaking out. Go to a weekly chart. You can see it has successfully cleared this 4250 area. Even on a monthly chart, take a look at that. You're starting to finally see some follow through to the upside after all of these tails going back the past several months. So I hope those ideas help. And again, I want to remind you guys, the webinar. Go to thetraderisk.com/webinar. Just a couple of weeks, March 22nd. Register for free. We've got some good content coming there. So thank you for watching, and I will catch you next time.